So rumor has it that Elon Musk wants to fire about 3/4 of the staff over at Twitter. So if you're employed at Twitter, look out. Hey everyone, this is Chris. Welcome back to the channel. Just want to have a chat with you guys about what's going on with Elon Musk, Twitter, and what this says about the overall market, because I do think it's an important topic. So one, there was a rumor going around now that Elon wants to fire 75% of employees at Twitter, which is a lot. So if you're working over at Twitter, I mean, obviously that's very, very upsetting. And I remember when the first reports came out when they were saying Elon did like his first Zoom call. It was like a private meeting with all the staff. I guess there were people crying and stuff. And I get it. There were people on social media making fun of Twitter employees. Oh, you're just a bunch of sissies and pansies. Elon Musk is going to, bring you righteousness and you shouldn't be crying. But probably what's going on is people realize that their jobs are on the chopping block, right? Because there are going to be major changes at Twitter and major changes in the culture. And some people, right, want to start planning ahead. And it's tough, right? Knowing that your job may be gone. Now, as it turns out, 75% of the people may be gone. And I've been warning you guys about these things going into recession. It can get really scary out there, especially these kind of things, because one of the things that will be happening, there'll be probably a lot of buyouts and mergers. As stocks fall, as companies are losing money, they still have assets, but they're losing money, so they need someone to come and bail them out. So I'll give you an example. Another one would be like something like a Robinhood. They got a bunch of users, right, over there. There's people who use Robinhood. It is not a great business in terms of fundamentals, but a bigger bank can come and buy that. Now, going back to the Twitter thing, and this will relate to Robinhood, but the way you structure these deals says a lot about the current markets that we're in and sort of how everything is very, very fragile right now. What's going on, as you guys know, interest rates are going up, and also too, the money printing is essentially ended, and we're actually in the money vacuum stage or money burning stage. And sort of what does this have to do with Elon Musk's Twitter and things like that? So when everyone's making a bunch of money and everyone's happy, banks are just lending out loans and every money's flying out everywhere, all over the place, and everyone's way over leveraged, meaning that everyone borrowed too much. Now, one of the things that happened when something like Elon Musk is, remember, banks make money essentially like I lend you money, I charge you interest, you pay me my money back that I originally lent you, and on top of that, I get profit from the interest. You guys get this basic idea. One of the things that happens with Elon Musk, if he wants to buy something like Twitter, he doesn't actually have all that cash, right? He's worth a ton of money, but he does not just sit on piles of cash. He's got essentially a bunch of Tesla stock that's obviously worth something, right? Of course it is. It's the ownership of Tesla, and it's definitely worth something. But here's the thing. So he doesn't have the cash. He wants to buy Twitter. So what he does, he goes to the bank, we'll say Morgan Stanley in this example, and he says, hey, Morgan Stanley, give me the money to buy Twitter. And Morgan Stanley says, okay, what we're going to do, because we like you and you're a billionaire, you have all the stock, you're going to use that as collateral, right? You're going to use that as your net worth, because we know you're good for it. We know Tesla's good for it. We know it's a great company, so we're going to just loan you a bunch of money. Here's the thing, though, which makes the deals real funky these days, is that Tesla's been going down in value, right? And so what happens if you're Morgan Stanley, say, for example, and you made loans based on terms thinking that Tesla was going to be worth a lot more than it is today? Suddenly it messes up all your numbers and paperwork. This is sort of why you're seeing volatility in markets. People are kind of worried about how many deals are structured, right? Because they're structured based on everything is rosy, but everything's not so rosy. What if Tesla, for example, doesn't make that much money in the future, right? Okay. Moreover, keep going. When things are rosy and everyone's making a bunch of money and the valuation of Tesla's high and Elon can borrow tons of money, right? And because everybody loves him, then he's like, you know what? I got so much money. I'm so great. Everything's going to be great. My revenue on Tesla's going to, quadruple every single year. We're going to be so rich. I'm just going to buy any company I want for any price that I want, because I don't care about money, because I have unlimited money. And so then he goes and he tweets out, I'm going to buy Twitter for $54.20, which, isn't a great price. And so what happens then is, I'm sure you guys understand this, as everything starts cooling off, as the value of his company starts going down, as he sees less money coming in through the door, and Morgan Stanley's like, whoa, we made these terms and agreements with you, but you got like less net worth. And so what's going on over there, Elon? And Elon's like, oh crap, I made this deal to buy too expensive, Twitter, and I better try to get out of it. So he tried to get out of the deal, which obviously didn't work, right? The courts are like, yo, you were tweeting out everything, you filed paperwork, you said you're going to buy it for this price. The Twitter board is like, yo, you said you're going to buy it for this price, you can't get out of the deal. And Elon tried to wheels his way out of it, but it's not going to happen. So now he's forced to buy this essentially company that's overvalued, which is Twitter, right? And essentially overvalued means you're paying too much for a company that doesn't really generate enough money for what you're paying for, right? You get the gist of it. So one of the things that you can do then, of course, is cut jobs, right? Which is what he's doing to try to keep costs down. But the problem is, and there's a couple of problems with this thing. One is they want to essentially double the profit slash revenues. They want to just basically make Twitter much better, make it more efficient, and make a lot more money. But it's tough to do when you're cutting a bunch of your workforce. That's going to really decrease morale over at Twitter. And how are you going to do all these great initiatives to make more money when you have a lot less staff? So I think that part's going to be really, really tricky to do. And no matter what they say, I find it hard to believe. That's my opinion on that. Moreover, we just saw that Snapchat reported earnings, and they're saying like, you know what, things are going pretty bad over there. Our losses are increasing. Advertisers aren't so keen on giving us money because we're going into recession. Cost to borrow money is much higher, as well as privacy changes over in Apple. We can't collect data and use that data to sell to advertisers, right? And so Twitter's in the same space as Snap, and it just feels like, okay, if Snapchat's falling, I don't really see good things in the future for Twitter. And now Elon Musk wants to cut staff and try to like make a bunch of changes with less people. That seems kind of iffy to me. And then moreover, remember Morgan Stanley or whatever banks, right? There's a bunch of banks involved with this. They're like, okay, we're lending money to Elon based on evaluations of his net worth based on a company that's also going down in price because sales are going to be slowing in a recession and people want to buy less Teslas. And you're purchasing a company for too high a price that's also worth less because that industry is also sinking. Basically, everything's coming down, right? And all these people are on the hook for a whole bunch of money. I'll give you an example. So part of structuring the deal over at Twitter is that they're going to have to take on $13 billion in debt. And just in interest payments alone, it's about $1 billion a year. So I'm just laughing because it's like, this whole thing is a house of cards. And I think the Twitter deal with Elon Musk is a microcosm or representation of everything happening in the market. And I think you may see a lot of these crazy deals happening everywhere. Not just with Twitter. You could see something crazy like this with Credit Suisse. Like, for example, we've been finding out, and this is real, my wife was saying, like, in Korea, there's been reports, because you don't get this in American news, but in the Korean news, I guess a lot of the Korean mafia keep their money over at Swiss banks and places like Credit Suisse, shocked. These kind of things happen, and I'm just laughing because it's like, if you've lived through 0809, we've seen this kind of stuff before where everyone has liquidity problems because basically you're basing all of your, let's say, lending practices based on sky-high valuations, meaning that you're predicting rosiest future in the world. And suddenly when those futures flip, no one's worth anything anymore, right? You're all basing everyone's worth on their future. And this is sort of like, take this for example. ARK Invest and all the Tesla pumpers, they always say, oh, Tesla, they're going to have robot drivers and FSD, and they're going to be building, space machines, and they're going to be building teleporters and blah, blah, blah. And they're way more than a car company, Chris. You're just too stupid to understand that. And they're basing like, that Tesla's going to go 1,000% and we're all going to be Teslaonaires, right? And the problem is that when you take these rosiest scenarios and then you pay prices for those rosiest scenarios, and suddenly when those things don't work out, everything starts to come down. And this is sort of one of the things that we're seeing in the market is that you just had way too much fervor, way too much money printing, and way too much commitment, or overcommitment, I should say, to making deals. And now you're stuck in deals that are bad. So that's sort of what's going on with Twitter and Musk. But I want you to understand that this is a larger theme that you're going to be seeing in the market where companies are essentially on the hook. And essentially what's going to happen as well is you're going to see a lot of shuffling of banks of trying to sell off bad debt. Just remember the 0809 crisis, the basic gist of it was you had a bunch of people, right, who borrowed a bunch of money basically to buy a bunch of houses they couldn't afford, essentially. They lose their jobs, interest rates go up, and suddenly no one can pay back these loans. And so the banks, what they tried to do is like hide these basically bad contracts, bad loans, repackage them, sell them to other people, and try to pass off a bunch of crap to each other. So I think that we have a similar situation here. I can't tell you possibly how bad it's going to get. Other than, just this one Twitter deal, I think is part of it. And moreover, when you're talking about laying people off because of, said bad deals, remember you're overcommitted to basically paying an overvalued company. Now you got to fire people to cut costs. I think this one issue is going to be kind of in many different companies. So I hope you guys understand this whole problem. I think it's a real problem. And I just want you to understand that if you're in this boat, you're not alone. And this is why I keep saying you guys, you got to have skills and talents that you need. That companies need, and that you solve people's problems and then show that you're valuable, because I think it's going to be a real fight. So unemployment's going to go up. We're at 3.5% now. I think it's going to go 5 to 10. And I think there's just so much over leveraging right now, and the way the markets are behaving, the way the bond market is behaving, I think it's exposing a lot. And you could take a look at the example is of the pension funds in England. So basically, the way that they calculated their borrowing essentially is on, if interest rates move at a slow pace, at a glacial pace, and suddenly when interest rates start spiking, right? Say, for example, here in USA, when the Federal Reserve starts raising interest rates, it forces other countries to kind of follow suit. And you start seeing like all of this crazy movement because everyone had their calculations based on interest rates don't move that quickly. There are rosy scenarios in the future and everything's going to be great. And everyone essentially overextended themselves. So I think we have an extension of overextension. I think we have, I'll repeat, I think we have a situation of people are overextended. They were way too rosy and also way too arrogant, thinking that the future is always going to be good. And unfortunately, a lot of people are going to pay the price for this thing. So I'd love to hear your thoughts on this. Hope you guys understand what we're talking about here. And everything is the Musk and the Twitter thing. It seems to all relate. And that's it. That's what's going on. So thanks for watching. I'll catch you in the next video.